Welcome to your market brief for the week of April 13th. As the coronavirus crisis continues, will major U.S. indices maintain last week's positive momentum? I'm joined by JJ Kinahan, Chief Market Strategist with TD Ameritrade. He joins me from Chicago. So, JJ, I want to start by asking you about the markets. We're coming off the best week for stocks in some 45 years. Could give up some of those gains today based on the futures, but is the coronavirus bear market over?
Well, I think it's hard to say it's definitely over, especially when you see a VIX that's going to be above 40. It's telling you volatility is going to continue. Now, maybe in the short term, with all the money the federal government has put in, we continue to see the support. But I think the next real test for the market is going to be when we go back to work, to be honest with you, because there are now such great expectations with all this money coming into the market that we are suddenly going to rocket higher and everything's going to be back to normal. And I think people have to temper that a little bit. I use the middle seat analogy. When are people going to, not that anybody ever wanted to sit in the middle seat in a plane, but when are people actually going to be comfortable sitting in the middle seat in a plane? And to me, when that starts to happen again, that's when we're fully back to normal. As we start to get back, you may see restaurants, et cetera, start to get a little bit more crowded. But I think a lot of the transportation-related companies are still going to have a little bit of a problem sort of cycling back up. So again, I don't think we're necessarily done with the volatility. We're at a level here that's very interesting as we head into today's action. As you mentioned, we're down a little bit, right? Just below 2750 in pre-market action on the S&P 500. Look for that 2810 level. That's what we really want to break through. That's about halfway through the February high, March 23rd low. And I think, we've gone and tested it. That's going to be the level you really want to watch over the next couple of days.
So keeping an eye on those technical levels, but do you think that investors are getting ahead of themselves then, based kind of pricing in maybe a recovery that's more of a V shape than we'll actually see?
Well, I think it's tough to say that it's definitely going to be a V shape. The one thing I would warn people, you have to remember right now, we're trying to reprice every single stock in the market at the same time based on this crazy, unknown, so to speak. So with that, the market's going to misprice them at certain times throughout the way until we get there. So I think you have to be very careful of being all in or saying we're definitely going to go for a V. Again, back to where I started, when you see VIX volatility levels at this level, the market is telling you should expect intraday moves, you should expect intra-week moves. So when you're trying to reprice the entire market at the same time, you're probably going to get it wrong for a little while, and especially as we're not sure when everybody's going to go back to work. We're not sure as the coronavirus, thankfully has started to mitigate, it seems, in New York, maybe mitigate a bit here in Chicago, but throughout the rest of the country, I don't know that we've seen it peak, between Chicago and Los Angeles.
Shifting to another headline, in hopes of boosting crashing prices, OPEC, Russia, and other oil-producing nations, of course, finalized an unprecedented production of nearly 10 million barrels, or a tenth of global supply. Is that enough, JJ, or just temporary relief?
Well, the problem that they've had, in theory, sounds wonderful, although we're seeing what I would say is a little bit of a muted reaction this morning with, as you and I speak in pre-market, crude oil up about 25 cents. With that said, one of the things with these deals that we've seen before is on paper, they're awesome. And then in reality, somebody breaks the deal. Implementation seems to be where this group has a little bit of difficulty going forward. We'll see what happens here. The demand, obviously, right now with everything going on, there isn't the demand for crude oil is there is normally. Not that many people need to buy gallons of gas like they used to, but you can see the prices at the pump are significantly lower. And I think actually getting the demand side of that equation solved would be the best thing that can happen, as much as they're trying to come together on the supply side. Getting the economy back to normal will be the best thing that can happen with crude oil prices.
JJ Kinahan, always appreciate you joining us. Thanks so much.
Thank you. Hope to see you live soon.
Now for a preview of the week ahead. Earnings season shifts into high gear with some of Wall Street's largest firms delivering quarterly results. JP Morgan and Wells Fargo report on Tuesday. Bank of America, Citigroup, Goldman, and Morgan Stanley report on Wednesday. And then on Thursday, we'll hear from Bank of New York Mellon. Over the last week, the banks have received hundreds of thousands of loan requests under the Paycheck Protection Program. So, analysts will be curious for details on both the industries and the geographies making those requests, as well as any insight they can give for their continued operations, as was noted by Barron's reporter Carlton English. Taking a look at the economic calendar, we'll get data to help clarify the struggles facing retail and housing in the US. We'll also get housing construction data for March. And of course, we'll continue to closely monitor weekly claims for unemployment insurance. Now, with that, I recently spoke with Robert Reich. He's former U.S. Labor Secretary, author of the new book, The System, and public policy professor with UC Berkeley. Our conversation came on the heels of nearly 17 million Americans filing for unemployment over the past 3 weeks amid the coronavirus pandemic. Here's Professor Reich's take.
Well, we haven't seen anything like this. And certainly since we've been collecting data on unemployment, 16.8 million people filing for unemployment claims over the last 3 weeks is really a record. It suggests that the total unemployment rate for April may be as high as 15%. And that is, again, heading toward a record. Just for context, in the Great Depression, we had about 25% unemployment. It would not surprise me if we got, by the end of May, to something close to 25% at the rate we're going right now.
And then beyond May, what could that look like? Are you as concerned?
There's simply no way of knowing. There are voices in the policy world and political world who are saying we need to get back to work as soon as possible. But then there are people in the public health world, and I am not an epidemiologist. I don't know how to evaluate this, but there are a lot of very distinguished public health people who are saying that we must not rush going back into work. If people are sheltering in place, that helps a great deal with regard to slowing the spread of the virus. And we need to do that as long as we possibly can. And that would imply into the summer. Now, again, you have to weigh and balance things that are almost impossible to weigh and balance. Public health and safety, to me at least, come first. So I would err on the side of making sure that as many people are safe as possible, which may mean not going back to work until June or July, or perhaps even later. The scale and spread of this disease is not yet known in the United States. There's some evidence that in places that are hotspots like New York, at least the spread is slowing down. And fewer people are dying, but that is small consolation, particularly when you get to the rest of the United States, where you have not yet reached any peak at all.
Are you concerned that when we come out of this, it's just going to be the Amazons and the Costcos and the Chipotles of the world still standing?
I'm very concerned. I think some small businesses will manage to hold on. Many of them have the brands, or they have loyal employees, or they have very loyal customers, and they will bounce back even if they have to temporarily close. But a lot of small businesses will not be able to hold on. And small businesses really are the backbone of our economy, and they're the backbone of the labor force. They create most jobs. Now, having said that, let me also remind you and everybody who is watching that this downturn, this economic downturn, this loss of jobs is not like any other economic downturn we have experienced. This is not like the Great Recession or the Great Depression. This was not brought on by the bursting of a housing bubble or a financial bubble or a debt bubble. This is brought on by a pandemic. So when this is over, this pandemic, that is when people feel it possible to leave and go back to work and start shopping again, when people have that kind of confidence. And we're talking about a different kind of consumer confidence than we normally talk about. We're talking about confidence in their own health and the health of the society, essentially. Then it's possible that everything will bounce back pretty quickly, and many of these small businesses will find their footing once again. But I do worry about a lot of these businesses that just simply will have a hard time rehiring and getting going again, getting the capital, getting the equipment, paying the rent, getting the insurance. It's going to be a big, difficult transition.
My thanks to Robert Reich. That concludes today's Market Brief. I'm Caroline Woods. Thanks so much for watching. Stay safe.